Welcome everybody to the weekly game plan. We're going to be covering the broad markets, we're going to be covering some swing trade ideas, and then I'm going to get into your guys' Q&A. We have the market selling off to start August, and if you guys have been paying attention to the weekly reports, I've been saying that, hey, we should probably see some chop into the end of July. It's one of those things where the market's overbought, but it's still in an uptrend. But come August, we should see some seasonality kick into play. And that's exactly what took place. Generally, August tends to be a bearish month. On average, it tends to drop about 3%. Okay, so this is pretty normal. From the highs, the S&P 500 is down about 2.8%. So the question is that pretty much it? The futures are slightly green right now, just up about 0.07%. And if we go to the SPY, the S&P 500 ETF, what I have drawn on the chart here is the expected move for the week. So if you're new, the expected move is what's priced in by the options chain. It's priced in by the market makers, open interest, the Black-Scholes model. You can get super nerdy if you want. But basically, 2/3 of the time, price is going to be contained within the range, and 2/3 of the time, price will close within that range over any given option expiration. And what I like to do is I like to check the expected move at the end of the week. This week it's plus or minus about $13 on SPY. So I have it marked out on the chart. So the upper edge of the expected move is near this 634 to 635 spot. If the market bounces early in the week and by midweek we're kind of near that upper edge of the expected move, I might take some shorts trades on that. Day trade shorts, short-term swing trade shorts, maybe short trades and put options that expire at the end of August, and see if we can't test maybe the lower edge of the expected move. Maybe not this week, but like in coming weeks. The lower edge of the expected move is this SPY 607.70, okay? And if we got oversold there, I would like dip buys, okay? I'd like short-term dip buys, day trade dip buys, call option trades, ES longs, NQ longs near this support zone. And this lines up with the prior all-time high structure. So this is super cool. So look, top over here, this is in late December in 2024. 2025 kicks off, we sell off, we come back up to this resistance. It's late January, we reject it, reject it, reject it. And it just kept rejecting, and then we see a steeper sell-off, a bear flag that did end up playing to the downside. And then ever since then, we've been on a nice, good, steady, slow grind up. And so if we're coming back into the support zone, it makes sense to me that there could be some sort of a bounce. Does it have to bounce straight up to the highs? No. But there's a good trade to be had if it can bounce even just for a little bit. And I am leaning bullish into the end of the year. I think that the market can finish the year up around 10%. And right now, the S&P is up 6% year to date. So knowing that, if I can kind of, wiggle in through this dip, and as long as it's holding support, great. If it doesn't hold support, guess what? I was wrong on that trade, and I have to look for more short setups and more protection. And we'll cover different stocks that we can short, different setups to short, and also a couple of relative strength long names. Look at stocks to wheel, and I'll have you guys on your way. So that's the S&P 500. I'll be breaking it down as we go throughout this live stream. Okay, so that's SPY. Let's check out IWM. So the Russell 2000, big breakdown from here. I've been talking about how I'm short IWM from up in these highs, and it really never broke out. It kind of squeaked up right here, and I was kind of puckering my butt cheeks in case it was going to break out. But the relative weakness in the IWM held. This is where most of the stocks live, and small caps eventually broke down from that range. And if you guys have been following the alerts in victory trades, I noted, hey, we're finally starting to break down. Is it going to be a liquidity sweep where it breaks support and then jabs back up? Or is this going to be a real breakdown? Notice what happened to the volume. Volume started to rise as it was breaking down. That tells us that it's more likely to continue to break down. And on Friday, early in the morning, took profits on those Russell 2000 index bearish put option trades. And so that was a really, really nice gain. Let's see what else the IWM has in store for us. So still looking for relative weakness on IWM. These small caps are going to get hurt as long as interest rates can remain relatively high and the Fed is not going to cut rates. They're likely going to cut rates in September just due to the bad jobs report data on Friday. And so, you know, as long as rates are high and there's no rate cuts, IWM, I'd look for weakness. If it could potentially bounce and maybe reject from this 221 area, that could be a short a short opportunity. You can take that with options. You can trade RUT, IWM. You can buy TZA if you're super aggressive. This goes up 3 times the rate that IWM drops. You know, that's up 20% in just a week. If you think about it, TWM, this goes up 2 times the rate that IWM drops. Okay, so this was up 13%. These are not meant to be held as long-term investments, only for a couple of days to maybe a couple of weeks if you're really, really careful. Okay, so manage your position size, manage your entry, manage your stop loss. After all that, you can only manage your position size, entry, and stop loss. The market just kind of takes care of the rest for you. Ideally, you try to hold to your profit target, but if your trading plan says that you can adjust your profit target, then be sure to do that. Okay, so that's the SPY and IWM. Let's check out the NASDAQ, QQQ. QQQ, again, grinding higher. This could have been a rising wedge. It was more so a channel. You can see the high points and the low points. It's a pretty consistent channel. And buyers kept getting rewarded for buying the dip until you gap underneath that. And then, yeah, trend lines they're not everything. They're just one aspect of the market. But when you break that trend line, you gapped underneath it. We didn't even get a retest of the trend line. It was a gap and go day on Friday. So if we're taking a look at different stocks within QQQ, you know, Netflix, not too bad of a pullback, but still pulling back, looking a little bit weak right here. We'll see if Netflix wants to break down underneath this 1150. I probably wouldn't trade that, but I just watch it, you know. Apple had this kind of equilibrium over here where we had lower highs. We had this like flat support. It broke out over this 205 area, got a nice good move up to 215 and a harsh rejection after earnings. I was doing some AI earnings analysis and AI predicted a neutral / bearish Apple earnings reaction. And so what I do, I just did a small little bear call credit spread, sold the 210 call, bought the 212 call, 212.50, and that expired for max profit. And so earnings trades still in play, and AI has been doing pretty well. It's not perfect. AI has been right about 2/3 of the time on its earnings predictions, which has generated actually some pretty good profits for 2025. I'm not going to alert any earnings trades just because it is more of a gamble, but I can just note, hey, here's what can happen. Here's a defined risk trade. Take it if you like. It's basically just like a blackjack hand with a little bit more edge than blackjack, for me at least. So that's on Apple. If we take a look at Amazon, big dump on Amazon. I actually got a small little $10 profit on Amazon. I did an iron condor, but it was slightly bearish weighted, and it actually started to break underneath the lower edge of the expected move. And Amazon was one of those stocks where this was more of a rising wedge, where it's starting to pinch towards those highs, steep higher lows, pinch towards those highs. They just kept grinding Amazon higher. It's kind of like they bought the rumor, sold the news. And so Amazon, I'd leave this alone whenever you get a big gap like this. Just let it sell for like 3 days. Even if it bounces, just leave it alone and then let it form a new chart structure. I would like Amazon dip buys if it got to 193, okay? 193 is kind of like a good level. I'm not saying it's going to get there. I'm just saying if it's there, hey, I got an opportunity. I got a setup. So watch that 193 level on Amazon. Next up is Tesla. Tesla starting to break bearish. This is going to be a bearish trade idea for this upcoming week. The bearish volume really needs to come in, but Tesla's looking really weak. You got this equilibrium. You got this high, low, lower high, higher low, lower high, higher low, lower high, lower low. Start of a new trend. Either this is a big fake out before a big break up, or it's an actual breakdown where it sticks, holds underneath the pennant, and breaks out to the downside. So Tesla looks bearish underneath 300. If you're going to take a short, good luck. It's tricky. Tesla's one of those stocks where it can whip around. It's very news driven. But if you do take the short underneath 300, stop on that could be like 320. And you'd target, a move probably down to this like 260 to 280 area. I wouldn't get greedy on the short. And that could take until the end of October to really take place. So August tends to be a seasonally bearish month, and October tends to be a seasonally bearish month. November and December in general are a little bit more neutral to bullish. You get that Santa Claus rally. But so the way I structure my options expirations, I've got the technical setup, okay? I've got seasonality. How do I structure my expiration dates around that? I give myself till the end of October. So October bearish spreads on Tesla are in play if that's starting to break down. Tesla would be super bullish if it could get above 330, 340, definitely above 350, and definitely above 360, okay? So that's on Tesla. Meta, nice good gap up to all-time highs. Then sold off, kind of coming back in. Short-term support on Meta is going to be this like 738 level, so that could get tested real quick tomorrow. But we'll see. And no real setups on Meta. Just use it as like an indicator. Microsoft did a lot of long-term buying down here. I wish I would have bought like call options, but whatever. Nice steady uptrend. Look at that ruler of a trend line. Then a massive parabolic gap up. Who's buying Microsoft the day after earnings after this kind of a move? This is kind of like an island top. Maybe not an island top, but it's kind of like an exhaustion gap where it's extended and then you get one final pop. All the buyers that wanted to buy have already bought, and then sellers are already destroyed. And so supply takes over and Microsoft got crushed after having a really, really nice move up. So Microsoft, I don't really have much of an opinion on it. I do think that this is one of those stocks that you kind of just dollar cost average into. You invest in it, but you don't like trade it really. Maybe you can take some iron condors if the implied volatility is high, but $13 is the expected move for Microsoft. You know, yeah, I don't have too much of an opinion on that. An iron condor could be okay for Microsoft. Okay. We take a look at Google. I'd like a dip buy near like that 181 level. Long term, my price target on Google is 230 per share. So I still like the stock. I feel like I'm forgetting some tech stocks, but that's fine. Nvidia, gap up, new all-time highs. Friday, gap down, a bit of a doji day. If Nvidia could get oversold down to this like 160 level, I like it for a potential dip buy. All right. Let's break down the VIX, the volatility and fear index. I told you guys, if VIX starts to wake up, that's where we can start to see that sell side pressure. So VIX, think of it as our volatility and fear index. When VIX is low, that's where you see the SPY, start to chop and have a slight uptrend. That's kind of what you see on SPY. When VIX is really high, okay, that's when you see SPY dumping. That's where you see it having sharp sell-offs, violent moves up, violent moves down. You start to see something like that when the VIX starts to break out. And as long as VIX is above 20, there's going to be more ranges, more volatility, and probably more sell-side activity. Now you can take it a step further and check out the VVIX. VVIX is the volatility of the VIX. So it's the rate of change of VIX. And so if you think about it, this has been going up like crazy from 85 up to 110. That's telling us the rate of change, the speed at which VIX is changing is fast. It's selling off fast all of a sudden. So that's where you create those sharp sell-offs. And that's why it's important to understand volatility in the markets, because things can be quiet for a period of time, and then boom, wake up. Market gets a slap to the face, gets a slap on that ass. And that's what the VVIX is telling us. And so if you see the VVIX continue to rise, you're going to see the SPY start to accelerate its sell-off. If the VVIX calms its ass down, you'll start to see the SPY start to like chop again. Start to see it maybe bounce, Okay, so that's VIX and VVIX. Understand the relationship between volatility and the rate at which the market sells off. Okay, next up is Bitcoin /BTC. Bitcoin having this tight range, super tight range, really, really narrow. Ping-ponging back and forth. Ping-pong, 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 ping-pong. Finally broke bear on Friday. At least it picked a direction on an increase in bearish volume. Bitcoin, let's see how it does at the retest of the former all-time highs. Call it 111K. Okay? If it holds it as support, great. There can be a little short-term long there. There's going to be a lot of resistance now at the prior breakdown area at 116,000. Okay. Bitcoin's super bullish above 121K if it can hold it as support. It's tried multiple times, but it's had a lot of resistance at 121K. Okay. Let's check out Ethereum. Ethereum, nice breakout over this like 2,800. Gets a nice good pop, gets a flag, a failed flag. So it does have 1 day of green and then starting to turn into a false breakout. Ethereum, I like dip buys near that 2,800. I'm not saying it's going to get there. I'm just saying if it gets there, I like that. And again, none of this is financial advice, you guys. This is all for educational purposes only, okay? None of this is an offer to buy or sell any security. Charts come with limitations and difficulties. I'm just showing you guys what I'm looking at, what I'm doing. And if you guys like it and you agree, go for it. If you don't like it or don't agree, that's totally cool. You want to trade your account. Don't trade somebody else's account or somebody else's ideas. I want you to have confidence in the trades and the trade ideas if you're going to put risk on the table. Okay. And you guys can always get my opinion if you want when you're in victory trades. Just tag @YoungCandlestick in the VT chat or the VT questions channel, or shoot me a DM and I got you. Okay. So again, I'm not telling you guys what to do. I'm just saying, hey, here's some key levels. See how it reacts there. And then we can evaluate it in real time. Okay. So that's Ethereum. Let's check out gold, GLD. Gold. I like gold longs into the end of 2025 and 2026. The entry is really tricky. There's no like real good technical entry. You can either buy at support or break of resistance. You can buy a liquidity sweep or a bear trap. There really hasn't been much of that on gold and silver. They've just been kind of going sideways to slightly higher. Silver, we've made a lot of money off of this year, last year, years prior. Let's see if silver holds support. If we take a look at /SI, those are up about 1/3%. So silver likely to gap up as of right now. Gold up about 1/3%, likely to gap up if it can hold. Watch out for day trade longs on gold and silver if they're setting up. Don't try to force it. You know, you really want to make sure that you've got those good setups. Okay, so gold, nice little breakout right over there. Lots of volume came in on Friday. GC futures 33.56. Keep an eye on that area. If it comes back to that area, it could be a potential support trade, support long trade. Okay? So that's on gold, that's silver. Let's check out the dollar, $DXY. We want to take a look at the value of the dollar because it's super important for determining, you know, imports, exports, how to balance the trade deficit. How strong is the dollar as the world reserve currency? What's the value of the cash sitting in your checking and savings account? Is it appreciating or depreciating? Dollar has been on a strong downtrend, but getting a nice little recovery. That's probably why gold and silver haven't broken out to the upside all that well just yet. Remember that there's a slight inverse correlation between gold and dollar. I believe it's -0.41 is the correlation coefficient. And so that just means that gold goes up, dollar goes down, gold goes up, but it's not perfectly correlated. That would be a -1, perfectly inversely correlated. A positive one means they move exactly the same in tandem. That'd be like SPY and SPX. You know, NASDAQ and SPX is 0.88, meaning they mostly move together. Okay. So that's a quick little lesson on the dollar. And then lastly, oil. Oil, we had a nice good gain on oil last week buying this breakout right over here. Crude oil over 67.06. We did this with USO call options, the weekly call options, which was pretty cool if you ask me, because weekly call options pay pretty well when you get a nice good green candle like that right away. So that was a nice good gain. Oil, let's see if it can hold support. It's right at support right now. This ties in with a lot of different energy stocks. We can take a look at XLE. What's XLE going to do? This kind of just looks flat. It did actually break that trend line and starting to look actually a little bit top heavy. We'll see. Triple top confirmed if it can break underneath 83. So that's tricky. I don't really have an opinion on energy and oil as of right now. You can take a look at healthcare. Healthcare, We've been noting neutral slash bearish ever since the big beautiful bill came out. However, I'm going to talk a bit later in the stream about some value opportunities in healthcare. Okay. Let's check out XLP. This is consumer staples. They were green on Friday while the market was red. You can take a look at Walmart. Walmart's looking pretty bullish, especially if it could break above 99.30 and above 100. So Walmart bullish above 100. Keep an eye on that. Stop on that trade gets tricky because if it is a breakout, it really shouldn't come back in all that fast. Tight stop would be 97.26. A looser stop, 94.24. Okay, Walmart does report earnings on August 21st. The dividend is 23 cents per share, and it is quarterly, which is pretty cool. But even other stocks in XLP haven't been doing too well. Costco, big bearish breakdown underneath 975. No love for Costco. Could be getting some support coming in right now. Nice dividend on Costco of $1.30 per share. All right. You can take a look at other sectors like XLK. That's just going to look like the NASDAQ. And you can take a look at XLF financials. Financials starting to get thwacked just a bit. So watch out for that. Wells Fargo starting to come in. Okay. Used to work for Wells Fargo for a number of years. Had a nice office in downtown Minneapolis. It was cool. But I prefer stock trading with you guys more. All right, JP Morgan. Again, a little bit stronger than Wells Fargo. You can take a look at Goldman Sachs. Much stronger than Wells Fargo and other names. You can take a look at natural gas /NG. Natural gas. Kind of selling off a little bit. If natural gas could get oversold one more time, maybe it breaks this bear flag lower. Drop, bear flag drop. You can duplicate the flag, extend it to the breakdown. If natural gas gets down to 2.36, I like UNG is the ETF. UNG for the wheel. Okay. But I want it to break down first. All right. So now I'm briefly going to get into some trade ideas, and then we're going to take your guys' questions. So keep posting your stocks. I see them right now. I see your stocks getting posted. Keep posting them. Good job. All right, so trade ideas part 1. First up is going to be on the S&P 500. It could be like something like SPX. SPX bearish call credit spreads at 63.40. So 63.40 for SPX. And I would look at something like the August 6th expiration. 63.40 by 63.45. Right now, this is only paying 80 cents in credit, so you have to take $420 of risk. But ideally, maybe I get filled at something like 1.4. So I like that bear call credit spread. I might enter this, and when I enter, I will alert it to you guys, okay? So if I get filled, let's just say I get filled at 1.5. That means I'm going to risk $350. That's the most I can lose to only make $150. That's the reward. Why would I do that? Because there's a very high probability that I'm going to make the $150 than I am to lose the $350. Plus, I can build into the position, which is nice. And the delta on this is only 0.14, which means that there's an 86% chance that I'm going to make that max profit. How many of you guys would like an 86% chance to make $150? Not saying it's guaranteed, and the probabilities are shifting all the time, but of course that delta will change if I get filled at 1.5. But you get the point. If you get a good entry, you can increase your probability of profit. Combine that with a high probability option trade, and you got yourself, some cash. And if it's wrong, you can stop out or just keep the risk in the spread. I'd be very surprised if we just zipped back up to all-time highs this week. Could it happen? Sure. I'm giving it a lower probability. I'm thinking that even if we bounce, there's going to be some sort of rejection. It doesn't even need to crash. It just needs to not go up and then stay up. That would be the worst case scenario. But I make money if it goes sideways, make money if it drops a little, make money if it drops a lot, make money if it goes up and then drops. I just don't make money if it goes up, stays up, or just squeezes straight to the moon. So I really like that trade idea. I like UUUU for the wheel. So selling cash secured puts maybe at like the 850 strike or the 8 strike and just wheeling that for a period of time. URA, uranium, if this could get oversold down to 34, I like that for longs. Okay. We talked about Nvidia. If it could get down to this 160 area, that could be an opportunity for bullish put credit spreads. We talked about Google, same thing. End of year bullish put credit spreads if it gets to 180. Okay, we talked about the Tesla bearish trade underneath 300. AMD reports earnings this week. There might be a trade idea on AMD earnings. Again, not going to be an alert, but I will just post a quick little spread, quick little gamble if you guys want. I've been making money off of them. And so it's just one of those things where anything can happen. They can have a good report and the stock can drop. They can have a bad report, the stock can go up. But earnings are on August 5th after market closes for AMD earnings. Okay? We can see some other earnings right over here. So we got AMD earnings. We got Duke Energy. We got Snapchat. We got Uber, Shopify, McDonald's, DraftKings, Elf Beauty. We got Eli Lilly. We got Sony. We got Twilio. We got Wendy's, Pinterest. Nothing crazy. There's Palantir earnings Monday after close. That's going to be a big one. Hims stock, Wayfair. Very interesting stuff. We got Fubo TV. We got Tempest AI. We got the Trade Desk, TTD. We got SoundHound AI, Sound. So not a big week for earnings, but, moderate week. Something new, something interesting. Here's a relative strength name that could be along. It's STNG, starting to get a bit of a rounded bottom. You can see higher lows starting to build. Nice volume breakout on Friday. STNG, I might look at something like selling the 45 put, buying the 42.50 put, see if I can't get something like 0.6 in credit. Or if I want to be a little bit more aggressive, maybe I'll buy the 45 call, sell the 47.50 call. I'm going to risk 145, let's say $150 to make $100. But I just need this to close 50 cents higher by the end of August 15th. The problem with a lot of long setups this month is that if the market is going to have a bearish month, most of these long setups are not going to be all that great. And so while these are swing ideas right now, I want to be focusing more on day trading. I want to be focused more on futures trading, SPX options trading, cash flowing trades with the wheel. I started an MSOS wheel on Friday. And so I'd like to see if MSOS can hold above 320. This is the MJ sector ETF. And again, I'm not crazy on MJ. It's more so just that we have some weekly bullish divergences. It's been in a strong downtrend for a long period of time. It's probably not going to go to zero, but maybe it does. But if it doesn't, there's a lot of upside. I think the MJ MSOS could go up by 50, 60, 70%, maybe even more. But I'd be targeting something like the $5 level on MSOS, and the current stock price is near 3, and I can wheel it so I can get weekly cash flow while I wait. Okay? And so I could maybe, here's what my position looks like. I've got some other MSOS positions, but on Friday went long 100 shares, sold the 350 covered call, so I got some extra cash flow. And let's say $5 is my price target. Okay, I can go out to December 2025. I can sell the 5 strike covered call. Maybe I can get filled at like 0.4. Maybe I can get filled at 0.5. Boom, I'll get a 10% return in just 4 months. And I would get an additional 60% profit off of the shares. That's if that wheel perfectly plays out. Does it have to? No, but at least I'm reducing my risk with the wheel. It's not like it's that big of a size. It's just a starter position. Okay, so wheeling, looking pretty interesting. Other stocks, Abivi, maybe this can be a bullish engulfing. I'm not thrilled about this setup, but maybe something like long over 197. Stop goes underneath 187. Super simple. I posted in the investing channel, NVO, the fair value is $65 per share. So longer term, I could take something like a bullish vertical. I actually have a limit order for this. I'm probably going to get filled at like 0.6, 0.5, 0.6. And this is 2027, buying the 45 call, selling the 65 call. Let's say I get filled at 5.0, I'm risking $500 to turn into $2,000. And I can enter and exit at any time. I've got multiple years to evaluate the trade. And if this could just close the gap up here at 70 within the next few years, I think a 4x return is pretty good. 3x return technically, because you make a $1,500 profit, but $500 would turn into $2,000. Why 2,000? Because it's a $20 wide spread, and the debit is what you pay. So you subtract the width of the spread minus the debit that you pay on a call debit spread. Otherwise, you could just grab shares and you get a nice dividend, 4.5%. So if you get the dividend and there's any sort of a recovery, cool. This ties in with UNH. I'm being nice and patient on UNH. This has been getting clapped from the big, beautiful bill. But let this get oversold for a bit more. I do think that UNH at some point can get back up to this $380 per share level. And you get a little dividend while you wait. But I want to really be careful with my buy points because it is a stock that is selling off. And you have to assume a trend continues until it doesn't. But UNH, yeah, big dump. 26% over there. And from here, down 60% from the highs. But even a retest of like 440 could be interesting. Okay? So those are some value trade ideas. Okay? Let's get into some other trade ideas, and then I'll break down your guys' stocks. Again, the main focus is going to be on SPX credit spreads, SPX iron condors, and futures trading. This next one's Boeing. Boeing broke this range bullish, found resistance right at my line, 241, 242 area, sold off 10%, and now finding support. I'd be looking at Boeing day trading calls if it breaks above 222. Stop will be 218.50 and see if it can't get up to this 226 level. Okay. Another one that I profited off of last week was OKLO. Nice breakout, strong trend. OKLO, it's a long over 74. Stop goes underneath 67. And I'd see if it could maybe test something like 78. Not the best risk to reward, maybe just a quick short-term trade there. And then lastly is MP Materials Corp. Beautiful high base. It's not beautiful. It's a decent high base. You can see these resistance points right here at the 64.70 level, 65 area. RSI is a bit overbought, but this would be a short-term momentum move. And you can take a look at doing something like buying the 64 call, and the expected move is $6, so I'd sell the 70 call. I'd risk $185 to potentially turn into $600. I don't think it closes above 70. There's only a 26% chance that it closes above 70 this week. But even something like a touch of 70 could be a good profit on that trade. So MP, buying the 64 call, selling the 70 call. Got it? All right, so those are some of the main trade ideas. I'll have some more, but I'm going to break down your guys' stocks right now. So post your stocks below. I'm just going to go down the list. Going down the list for you guys. Good to see you, Money Username. What's up? What's up, Indy, Freight and Finance? Pampy, Aaron, Ivan. What's up? What's up, Ethan? All right, let's take a look at PWR. PWR. Interesting. So you can see the correlation with the market with, that Friday gap down. Keep an eye on this trend line. It did just break it. It kind of closed back above it. This one's wild. I do like how it has earnings out of the way, but notice the direction after the earnings report. After the earnings report, if it's selling off, I have to assume that it's probably going to continue that. So I would lean bearish as long as it's underneath 400. But even if it's underneath, call it 410. So neutral / bears the forecast. It could be neutral if it gets above 410 and a little bit more bullish if it gets above 425. This one looks like it doesn't have super liquid options. No. Not the worst, but not good, really. So I wouldn't trade options on this, PWR. This does pay a dividend of 10 cents a share quarterly. A better dip buy support area would be like this 362 area. That's this prior structure, and it's a little bit better of a sell-off. You know, I was watching CNBC while I was walking on the treadmill at Lifetime. And it was literally the first down day after an extended uptrend. And they're like, is this a buying opportunity? And I'm just like, yeah, if your time horizon's, a couple of years, but like short term, like this could just be getting started. And so like, I like deeper retracements, not like crazy catching a knife, but like this type of a retracement is a good one. This was a good retracement right there. This one was barely a good retracement. And even then there hasn't been really any good pullbacks from these up waves. Remember that markets breathe in, breathe out, breathe in, breathe out, breathe in, breathe out, breathe in. It's barely taken any exhales. It's like got all this pent up air. Let that market sell a little bit. Not that it has to, and not even that I'm bearish. Like I don't really care. It's just more so just one down day is not an opportunity. Opportunities come from like deep oversold stuff. Like I guess UNH could be an example. An example of this would be like Meta on the weekly time frame. Look at this. Stock was freaking $88 a share in October of 2022. And the cash flows and the amount of users that they had said otherwise. Hey, this is deeply undervalued. Deeply undervalued. And that's like what we call opportunity, right? The first red candle after an extended up wave is not an opportunity, in my opinion. And every scenario is different, of course. And again, it depends on what time frame you're looking at, what kind of opportunity you're looking at. Just speaking out loud here. That's all. All right, so that's PWR. Let me know if you have any questions on that, Aaron, for PWR. Let's check out TSM, Taiwan Semiconductor. We've done all right on this one this year. TSM caught some bullish trades over here. Cool. Did some bullish butterflies. Did some iron condors over here. Those did well. Did some bullish put credit spreads over here. That butterfly, interesting. TSM's just kind of all over the place. So TSM, I am bullish on it. I would just like to see a pullback first. So I'd like to see the stock drop maybe 10% more before I get involved with it. 210 seems to be a good support for TSM. And that's just me kind of eyeballing a retracement. That's not like a precise level. A better level would be 197. So maybe something like I buy 0.5% position size at 210, 0.5% at, what is this, like 197? Maybe another 1 or 2% size at 180, and then boom, I've got a good position built out. Average cost would be somewhere near 200, and then I ride off into the sunset when it gets back above 200, if it gets back above 200. So I like TSM. Keep an eye on SMH, the semiconductor ETF. Again, kind of just getting squirrely near these highs. Squirrely. Like this is kind of orderly price action. Break above, hold. Nice move up, hold. Move up, hold. Awkward rising wedge. Choppy price action. Pump, dump. It's all over the place. It's a trickier read. So I like TSM long. Just let it get oversold. ETHU, that's going to tie in with Ethereum. So I like Ethereum dip buys near 2,800. And so I'm not really going to chart out ETHU, but likely if Ethereum gets to that 2,800 level, that'd be ETHU probably getting down to this like 70 area, 60 to 70 area. It's double levered, so it's not going to line up perfectly. Yeah, big dividend on BITO. Yeah, those yield maxes pay out. You do sacrifice some of that growth to get that short-term income though, but it works out. It works out. Let's check out Apple for freight and finance. Apple's been relatively weak for a long period of time. S&P 500's near all-time highs. This is off of its highs, down 21%. If we take a look at Morningstar, that's where the CFAs give their fundamental analysis on these stocks. And Morningstar doesn't like it. It looks like other analysts like Apple. Look, they got their website. Pull up the website. Come on, let's go. Let's go. This is apple.com. Look at how nice everything looks. What a beautiful website. Look, don't you just want to buy all their accessories? All right, that's enough free advertising for Apple. Was wondering when it's going to run. Seems like it's due. See, Apple fair value is $210 per share. So, according to Morningstar. And so, mark 210 on your chart. Apple really, right now, is only has like a 3% discount right now. And so, remember that relative strength and relative weakness can persist for a long period of time. Put up a chart or an indicator of relative strength, and you add it to your chart. It's this green line. Look at how weak it's been compared to the SPY. It's a downtrending RS line. You don't want to be buying stocks with a downtrending RS line. In fact, you look for short setups on them. Okay? An example of this is on AMD. Look at what happened to AMD once the downtrending relative strength line changed. Look, AMD was weak, right? And I would argue, yeah, when AMD was down at 76, it's due. It's due for a run. Wouldn't you say? AMD's due for a run. It's been getting beat up on. The market needs to bully somebody else now. Okay. Relative strength line shifts. You start to get a breakout. You start to get that uptrend. Boom. AMD goes on a strong uptrend. Gains over 100% from those lows. So what you want to do in terms of Apple is wait for this type of shift on the Apple chart. Okay? Take a screenshot of this right now. Screenshot that. This can help you find big gains in the market. Downtrending RS line. Uptrending RS line. Apple still in its downtrending RS line. Okay? But when it shifts, I'll let you know, hey, we could see a change in momentum from Apple being more bear to more bull. And there's an opportunity for us all. And we can find those big gains like on AMD. I'm not saying I caught AMD. I just day traded some AMD short-term swings. But yeah. Is that indicator on TradingView? It should be. Just look up relative strength and then you compare it to whatever you want to compare the strength to. So in this case, it's correlation with security, SPX. I can put in SPY. I can also put in QQQ. Technically, that might even be a little bit better of a comparison. So look, now I'm comparing it with QQQ. Oop. QQQ, not just QQQ. There we go. Look. Okay, so look, AMD's similar thing because QQQ is correlated with SPX. You see that shift in relative strength. It's really important to note. Got it? So no shift just yet. Any other questions, you guys? Quick little lesson on Friday's winning trade on SPX. So we did the SPX Iron Condor. And so let me draw out the box that I had. And so basically, remember, Iron Condors, I needed to stay within a range or close within the range. I just needed to close. I sold the 62.60 bear call credit spread. So my break even was 62.40. So that's this purple box is where I would have lost $260 if it sold off underneath. And then 61.75, 61.72 point. So that's the spot where I would have lost money, right? And then everything in the white box, any close within this white box would have been max profit. And so I like doing Iron Condors, you guys, after a big move. So here's a big move down. What does that do? That says IV goes up. Implied volatility is getting jacked up. Okay, from there, we're at this point in the day. I'm thinking, okay, we can probably bounce. We did bounce. But I think that even if we bounce, we probably reject some sort of resistance. So I alerted the Iron Condor right about there. I said, hey, I think the SPX is going to close underneath 62.60, but above 61.75. If so, give me plus $240 if it closes within that range. Otherwise, it's minus 260 if it closes outside that range. I like selling Iron Condors after the implied volatility spikes because then I have all lunch period for it to bullshit around, for it to chop, go nowhere. And then guess what? I closed early because I was anticipating a new low of day. So I actually took profits with just, 100 minutes left. And so I only gave up $45, but closed it for a nice strong profit right there. And I was right. We did hit a new low of the day. And the reason I closed it, because when you see a bear flag like this, VIX is high and we don't know how low the market can go, might as well just take the nice win. Take the $180 win, take the $200 win, not have to deal with it the rest of the day. And had the market continue to sell off and get destroyed into the close, I would have been very, very happy that I took that early profit, but it closed for max profit. So with Iron Condors, you want to sell when the implied volatility is high, take profits when there's not much juice left in it, when there's not that much left to make and there's a lot of time left, and just know that it's a high probability income strategy. Yeah, we've been seeing NQ open up with aggressive red candles. Do I think that'll change? That's something that's really tough to predict. You can speculate the order flow that's going to come in, but until you see it on the book map, the level 2, the time and sales, it's difficult to speculate that. So, generally whenever you get a big gap up, usually you see some selling in the morning. There's a lot of profit takers, call option buyers that are just getting out. If you gap underneath a critical support, that can lead to vicious red candles, which happened on Friday. If you gap above a support level, generally you can see it hold and you can see some upwards pressure. These are just generalizations, though. It's one of those things where you have to see the order flow in real time. Like, let's say tomorrow SPY gaps down underneath Friday's low. We could probably see some morning sell side activity because it'd probably want to grab orders from these defined wicks. So look at the SPX. Sells off, zips back up, creates a long lower wick. That's really important because that led to a strong uptrend for many, many days. That tells me that there's probably a lot of happy buyers that are sitting up on their positions right there that might have stop losses right underneath that low. If there are so many stop losses underneath a key area, it can turn into a magnet and the market can flush and grab up those stop loss orders, hunting for that liquidity. Think of the market as just a machine to hunt for the orders. It's hunting for liquidity. It's hunting for that supply and demand. Where are those orders stacking up? And so that's going to be key. I hope that answers your question about NQ opening up with aggressive red candles. You have to really see it in real time. And that's the key. And this is where Bookmap is helpful. You can see where the liquidity is on the chart. You can see where the orders are. You don't know if they're stop orders or limit orders, but there are orders there. There we go. So like even right now on MNQ futures, it's probably going to chop a lot because there's a lot of orders up here, minor orders down here, a little bit of liquidity right there. So that's my quick take on that. Do I try to hold my day trades for later in the week? I save my day trades if I want to lock in profits or I want to cut losses, or if it's a really high probability setup. I'm not too worried about, using day trades. I have a Roth account, a wheel account, and a cash account. Between that, I've got enough day trades. And I've got like 9 other brokers. So Each broker that you have gives you another 3 day trades. Plus, you combine that with ghetto spreads. You don't need day trades for futures trading. Ghetto spreads, futures trading, cash account, multiple accounts. You don't have to worry about PDT. And as with most of the alerts, like you guys take a look at the VT alerts channel. Like I'm posting the SPX Iron Condor and saying, hey, you know, you can likely hold this if you don't want to use a day trade. There's like a 92% chance you're going to make the last 45 bucks. I just didn't want to haggle with it for the last 2 hours of the day. So you don't need to use day trades if you don't want to. It's just nice to be able to take profit whenever you want. It's nice to be able to freely trade your account whenever you want. And I think in the future, they might remove that 25K PDT rule and just make it 2K. You need to diversify your brokers. You're all in on Iron Condors this week. Yeah, you've been crushing it. You've been crushing it. Like, take a look at some of the other wins in the channel. I love seeing you guys make money. Like, nothing satisfies me more than seeing you guys make good money. Like, boom, $135. Pretty easy for a few hours of work. Pampy, that's a typical day. We had Indy making $729 this week. Hell yeah. We have Imran. He started the month down 1.2K, finished up 2K. We got Junior over here crushing it, making $472. You just, all you really need to do with these credit spreads is just get a good entry. Get a good entry and be somewhat right on the direction. That's it. Just be somewhat right. If you're wrong, you're going to lose. Get a good entry, be somewhat right, risk the amount you're willing to risk, have your say uncle point, and then you're good to go. Boom, look at this. Look at this Iron Condor. $210. Oh, yeah. First option on SPX making $410. Boom. Quick little trade. Got some more credit spreads. Yeah, markets pull back. That was a bear call credit spread. We had Lawns get some AMD gains. Boom, up 11 grand. That's fantastic, isn't it? He used that relative strength line. Maybe he didn't. I actually don't know. I'd assume he used the relative strength line change. Okay? So yeah. That's all I have for this week's weekly game plan. Going to be pretty cash heavy. Looking for wheel setups. Various setups on different stocks. And we'll be good to go. Okay? Last week I had a great week of investment advisor training. And that was a lot of fun. I learned how to just manage clients, how to get clients, how to deliver results for clients, different tips and tricks, how to be more professional, how to be super organized. And I learned a lot about the back office at Gradient Investments. So I'll update you guys on that journey. But for now, the focus is on futures. Okay? Comment down below if you watch this on YouTube. Say what's up. Say hi, Greg. Tell me what stocks you're watching. All right? Thanks for tuning in. Peace out.